Good afternoon, ladies and gentlemen, and welcome to the INCE Group PLC interim results for the 6 months ending 30th September 2021 investor presentation. Throughout this presentation, investors will be in listen-only mode. Due to the company being in an offer period and therefore having to comply with the requirements of the takeover code, they will not be in a position to answer any live questions submitted today. We'll only be addressing those that were pre-submitted. However, please do submit your questions at any time through today's presentation, and the company will review and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll notify you by email when they are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll, and I'm sure the company would be most grateful for your engagement and response. And I'd now like to hand over to Simon Oakes, CFO, and Adrian Biles, CEO from INCE Group. Good afternoon to you both.
Good afternoon, everyone. Welcome to our half-year results, and thank you for your interest in our presentation today. My name is Adrian Biles, the CEO and founder of the INCE Group and a 16% shareholder. Many of you will be aware that on the 26th of October, we announced that we had reached an agreement on the terms of a recommended all-share offer for Arden. What this means is that our presentation will be a bit shorter than you're used to today, because we're currently in an offer period and are therefore restricted in what we can say at this time, and so may not be able to answer all your questions during the presentation. All the details of the Arden offer, including the strategic and financial rationale, can be found in the announcements on our website. Today, we're here to talk about our progress as a business and our financial performance during the first half of this financial year. I'll now hand over to our CFO, Simon Oakes, who will start by taking you through the financial review and give an indication of our current trading 2 months into the second half.
Good morning, everyone. My name is Simon Oakes. I will now take you through a summary of our trading during the first half. First, to summarise then what we've seen in the first half of this year. Number one, we've continued to achieve period-on-period revenue growth this year and delivered 49.9 million of revenue for the first 6 months. Number two, our operating profit before non-underlying items is 3.5 million. Number three, net borrowings have increased due both to lock-up as well as the repayment of items delayed during the pandemic. Number four, we are now focused on second half lock-up reduction, particularly in our Asia business. Number five, we are aiming to expand our business offering significantly through the recommended all-share offer for Arden PLC. And number six, we are reintroducing dividends to shareholders as previously indicated, with an interim dividend declared of 0.5 pence per share. Turning to our key financial highlights in some more detail. Revenue growth achieved of 5% overall 2.3 million on last year is driven by UK growth on the prior year of 5.6%, as a number of our sectors begin to see increasing activity as we emerge from the pandemic. A continuing growth in Asia as year-on-year momentum is sustained, resulting in like-for-like growth of 7.8%. EMEA has had a slower start to the year, with a 2.5% reduction on last year, as certain operational regulatory changes in a couple of our locations are put in place. However, it is expected to pick up in the second half of the year. It remains our expectation that activity will skew more towards H2, as was the case in prior years. Gross margin has declined from last year by 0.8 percentage points to 43.7%. We attribute this to the ongoing number of higher cost laterals who are still building their business, as we have returned to higher business development spend, for example, international travel, to drive this revenue up. Overheads are reducing over time as a result of reductions made last year and a continued focus on cost control across the group. It remains the case that we have a cost base that, without significant change, can support substantial further growth in revenue from where we are now. We have begun some office footprint rationalisation in our regional offices, in particular in Bristol. However, it remains the case that main medium-term UK lease cost savings we plan to achieve depend on break clauses, which are still around 12 months away. Overall, these trading activities have delivered 8% year-on-year growth in operating profit before non-underlying items, this being our key measure of the group's profit performance. Free cash generation this year was an outflow of 0.6 million. This is in part due to the previously noted repayment of items postponed from last year, as we managed cash through the pandemic. but also our lock-up days, being the time taken to do the work, bill and collect that work from our clients, remains high at 124 days. We aim for 100 days overall. This is particularly the case in Asia, and management's key focus is on reducing this in the second half of the year. Accordingly, in our business cycle, cash has reduced to 3 million and net debt has risen. We note, however, that our partner remuneration model incentivizes collection of outstanding balances for year end, as partners can only earn their individual income from collected debtors in a given financial year. So there is a natural steer towards improved collections in the second half of the year. As we therefore expect our cash flow to improve towards the year end, we are reintroducing an interim dividend. We know the importance of a dividend to our shareholder base and of ensuring cash flow stability in the business. We have therefore set a dividend of 0.5 pence per share, which will meet both these criteria. I'll now hand back to Adrian.
We're delighted by the quality of the hires we've been able to make during the period, testament to the strength of the business model itself, and the potential that it is seen to offer. There were significant additions to our firepower as a firm in regulatory solutions and the global maritime division. We promoted 10 lawyers to partner, bolstering our maritime, private client, insurance, real estate and employment practices. We opened a new Scotland office, adding a new maritime partner and head of office, and last but not least, a new partner and global head of insurance joined us. We're building a world-class advisory group with multiple and overlapping opportunities to provide our clients with the support they need. To that end, we strengthened 3 parts of our business during the period. Firstly, we integrated our private client offerings with the formal launch of INCE Private Wealth. Clients here include high net worth individuals, families, business owners, entrepreneurs with complex financial affairs in the UK and internationally. Secondly, we launched INCE Corporate Finance, the group's FCA regulated business, which provides bespoke advisory and structured finance solutions internationally. INCE Corporate Finance is undertaking 88 transactions with a total value of $3.4 billion across 19 countries since becoming FCA registered in September 2016. And thirdly, INCE Maritime, which was established to help ship owners and operators navigate the maritime sector's greatest challenges. We announced a new collaboration with a specialist predictive intelligence company and US law firm to offer sanctions compliance solutions to maritime clients, which is an integrated offering for the maritime sector combining legal advisory, business consultancy, and technology. So as you're aware, we've announced an agreed all-share offer for Ardent Partners PLC. It's an unashamedly innovative deal driven by our passion to provide those services that our clients value. The ability to raise finance will give us a unique proposition that is particularly relevant to the SME market around the world. Meanwhile, the London market is one of the world's leading financial centres for equity investment. We believe that the INCE network and market connections, combined with Ardent's proven fundraising track record, will create many opportunities to the benefit of the current and potential clients of both businesses. We also believe that it's great news for our people and our investors as we continue to challenge the traditional structure of the professional and financial services sectors. To summarise, I would characterise these results as solid. We're not in the business of hyping our performance, but there's no doubt that we're making good progress. Let's not forget that this has been achieved against the backdrop of COVID, which has been particularly challenging for a business that operates across so many geographies. In terms of the results announcement this morning, I would like to highlight 3 main points. Firstly, our continuing revenue growth and operating profit before non-underlying items of £3.5 million. Secondly, net borrowings did increase due to lockup and repayment of items delayed during pandemic, and there will be a focus on second half lockup reduction, particularly in Asia. And finally, of course, I must repeat the recommended all-share offer for Ardent Partners PLC. In terms of the outlook and current trading, second half trading so far has been encouraging, and an interim dividend has been declared. The board considers that the group has the strength, flexibility and commitment to prosper and grow for the benefit of shareholders and colleagues over the coming years. Thank you. We'll now move over to Q&A.
That's great. Thank you, Simon, Adrian, for that presentation. As we said, we'll only be addressing the pre-submitted questions, but thank you to those investors that took the time to submit questions ahead of today's event. And of course, any other questions that you may have, do submit using the live Q&A, and the company will evaluate those after today's meeting. So perhaps if I may start with the first question here, that we received ahead of today's event. Could I please ask Adrian Simon to what the expected revenue from Ardent is likely to be after the first full year of trading under INCE, and what other internal synergies are there?
Thank you, Mark. Unfortunately, due to the takeover code restrictions we're obliged to follow during the offer period, we are unfortunately unable to answer that question.
Thank you. Turning to the next question, if I may, bearing in mind the cost of M&A and the frequency of recent deals, is there any will to consolidate the businesses INCE currently runs and improve the balance sheet before undertaking any further activity?
Thanks, Mark. This is Adrian. While M&A will continue to be an element of our growth strategy, where we see deals that enhance returns to shareholders in the medium term through improvements in our operating performance and/or a complementary increase in the services we offer to clients, we continue to focus on reducing the level of deferred consideration in the balance sheet, noting there is now only just over a year until the majority of this balance for the INCE deal and several other deals is repaid. And secondly, preparing to rationalise our UK office footprint as break clauses arise in the next 12 months.
Thank you very much indeed. The next question reads as follows: at the end of the wind down period for the deferred considerations, am I right in assuming that all partners under the current 15% scheme will be moved to the company standard 10% profit share? And how should this impact company / shareholder profits?
Thanks, Mark. It's Simon. Under pre-existing contracts, this will be the case. That will improve cash generation over the next year as deferred consideration is paid out, although it may temporarily reduce overall profit levels. However, we are currently modelling a partner remuneration package that will be based on metrics that drive greater collaborative behaviour across the group, albeit with no material overall differential to the current model.
Thank you, Simon. To what extent has the dispute resolution business picked up in the last 6 months?
This is Adrian. Dispute resolution has had a strong comeback and is even ahead of pre-pandemic half year 20 to September 19 revenues, despite some restrictions still in place until March 2022.
Thank you very much indeed, Adrian. Got 3 final pre-submitted questions, the first of which is: to what extent have last year's deferred liabilities been paid off this year?
Thanks, Simon. I'll take that one. In the first half, we've paid off just over 3.2 million deferred consideration, and the remaining balance is now 20 million. We note that it continues to be the case that this deferred consideration is contingent on fees being billed and collected, i.e. it is not a fixed payable balance, rather it is an estimate of what will be payable based on expected future performance.
Thank you. Moving on, if I may, to what extent has Asian lockup improved in the last 6 months?
I'll take this one as well. Lockup in Asia is still a challenge and a priority for management during the second half of the year. Our deals work such that partner remuneration is linked to bills collected up to the financial year end. So there is an incentive to improve collections, particularly in Q4, as has been observed in previous years.
Thank you, Simon. And if I may, just the final question that we received ahead of the event is: why are you paying a dividend at this stage when cash is still tight?
Thanks, and I'll take this one as well, Mark. We made a commitment previously to reintroduce dividends with our interim results. This is based on the formulation of returning 20% of post-tax earnings to shareholders, providing our cash flow permits this. And the declared dividend is designed to represent a first step on the way to meeting that aim.
Okay, well, look, that's very kind of you, Simon and Adrian. That does take care of those questions that you were able to answer, as we said at the beginning, due to you being in an offer period. Thank you to those investors that have submitted questions during today's event. And of course, these will be made available to the company. And to all investors on the call, we will send you notification when the recording's available, along with a copy of the slides and the published Q&A. Simon, Adrian, well, that therefore concludes today's presentation. So thank you once again. If I could please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of INCE Group PLC, we'd like to thank you for attending today's presentation. That now concludes today's session. Good afternoon to you all.